Ladies and gentlemen, good day and welcome to Astec Lifesciences Q1FY22 Earnings Conference Call hosted by Axis Capital. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal for an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ankur Periwal from Axis Capital. Thank you, and over to you, sir.
Thank you, Zed. Good afternoon, everyone, and thank you for joining us on the earnings call of Astec Lifesciences for Q1 FY22. We have with us today Mr. Nadir Godrej, Chairman of Godrej Agrovet and Astec Lifesciences. From Godrej Agrovet, we have Mr. Balram S. Yadav, Managing Director, Mr. S. Varadaraj, Chief Financial Officer, and from Astec Lifesciences, we have with us Mr. Ashok Hiramat, Managing Director, and Mr. Arijit Mukherjee, Chief Operating Officer of the company. We would like to begin the call with brief opening remarks from the management, following which we will have the forum open for an interactive Q&A session. But before we start, I would like to point out that some statements made in today's call may be forward-looking in nature, and actual results may differ from those expressed or implied. I would now like to invite Mr. Nadir Godrej for his initial remarks. Over to you, Mr. Godrej.
Thank you. Good day, everyone. I welcome you all to the Q1 Fiscal Year 22 earnings call of Astec Lifesciences. I hope you are safe and healthy. The second wave of COVID-19 was much more severe than the first wave, especially for rural India. Economic activity was significantly impacted in the second half of April and May, though the situation improved from June onwards. Macroeconomic indicators such as GST collections, exports, power consumption also marked an increase in June from low levels seen in the earlier 2 months. The business environment is expected to further improve as the vaccination drive gathers traction, thereby limiting the COVID-19 spread. We expect the situation to be much better in the second half of the year. The agricultural sector is again expected to perform better than last year, as many goods and services are essential in nature, and the macro indicators look promising for the sector. This will benefit the farmers and companies operating in this segment. For our products, the demand remains strong, both in the domestic and the international markets. Though the end product prices have softened in Q1, a gradual price increase is expected in the near term. In terms of the performance during the first quarter of the financial year 21-22, the key highlights are as follows. Astec reported a consolidated total income of 129 crore in Q1 compared to 113 crore in the same period last year. EBITDA and profit before tax were 25 crore and 17 crore respectively, compared to 29 crore and 22 crore in the same period of the previous year. The volume growth was high in Q1, but the sales growth was restricted to 14.9% due to lower price of one of their key products. Geographically, sales growth was mainly driven by the domestic business. In Q1, domestic sales have grown by 27%, whereas export sales have declined by 13.6%. Also, the first quarter is not a strong quarter for the contract manufacturing business, as a large part of the orders are executed in Q2 to Q4 of every year. Therefore, the revenue in Q1 mainly comprises of the enterprise sales business. Gross profit margin for the quarter was 39.4% compared to 45.2% in the same period last year. In Q1, we consumed higher cost raw material inventory, which impacted gross margins. Raw material prices have started declining, which will improve the gross profit in the coming quarters. Further, Q1 of the previous year was an exceptional quarter, both in terms of significantly higher product prices and low raw material prices, resulting in a high base. The EBITDA margin for the quarter was at 19.7% compared to 26.1% in the previous year. Other expenses such as power costs, freight costs, and other fixed costs have increased due to normalization of business activities compared to the previous year. Commercial production at our herbicide plant could not start in Q1 due to the COVID-induced lockdown. However, trial production has started in Q2. Construction at our new state-of-the-art research and development facility was also delayed due to the lockdown, as well as some procedural changes. We expect the R&D facility to be completed by the third quarter of the next financial year. In the meantime, we increased our R&D capacity through leasing lab spaces to cater to our increased developmental requirements. For the remaining 9 months, we expect demand for our key products to remain strong, which will drive volume growth. We are in the process of launching 4 new contract manufacturing products and 1 product in enterprise sales. We believe that we will be able to successfully achieve our fiscal year 2022 profitability targets. Now I'd like to welcome our new CEO for Astec, Anurag Roy, who has recently joined the company. Anurag has 21 years of rich experience and has worked in leading pharmaceuticals and chemical companies. With this, I end my opening remarks, and we will be happy to take your questions. Thank you.
Mr. Roy?
Yes.
All right. So we open the floor for questions now. Ladies and gentlemen?
Yes.
Yes. Okay, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star and 1. Anyone who wishes to ask a question, please enter star and 1 at this time. Our first question is from the line of Saurabh from Asian Market Securities. Please go ahead.
Thank you for the opportunity. So my first question is on the growth, revenue growth. So can you give more detail in terms of which molecule has contributed to the growth, and also how has been the pricing for key molecules?
We don't actually give out individual molecule names and prices that we do, because that's frankly commercially classified information. But I can just tell you that in general, one of the key products, the prices declined in the range of 35% compared to the previous year. And that was because there was some production lines which were out of circulation in China because of COVID, came back online. And then suddenly there was a little bit of overcapacity in the market, and therefore the prices came down. Now that the supply-demand situation is more or less regularized, we expect the prices to kind of gradually recover. And at the same time, another molecule of ours, which is very key to us, the prices are very, very strong. There's a shortage in the market, and the prices are on a rising trend. When it comes to our CMO products, the price is predetermined with our customers, so there is no question of any ups and downs. They're determined before the year, and there's a cost-plus kind of a formula. So that's the way the pricing went.
Okay. So just any color on whether the prices of propiconazole, like, it has seen a good uptake. So can it be remain at this level for long, or again it will be for a particular phase, or what has led to this kind of strong uptick in the prices for propiconazole?
Well, out of 4 producers in China, 3 have closed down for various reasons. There's only 1 producer left. Hence, there's a major shortage, and therefore we don't see that the situation will improve for the whole of the year. And therefore, as far as we are concerned, we've fully sold out, and the shortage will drive prices up further and further. That is the situation.
Okay. So are our capacity fungible in terms of converting from some maybe from fluoroconazole to propiconazole manufacturing?
Well, we have dedicated lines for propiconazole and dedicated lines for tebuconazole, so we don't interchange them. Having said that, we have ability to debottleneck our plants and get more output from each one of them, which is what we're trying to do. And since both the products have a good demand, we're not trying to kind of move production from one line to the other.
Okay. And so in terms of the contract manufacturing, so last year it was impacted because of inventory level at the customer end. So how is the inventory situation right now, and how do you see the CMO business going ahead?
That problem in one of our key products, the inventory problem continues. It will continue for another year. So any growth that is coming out of our CMO business is coming out of new products that we are developing and introducing. This year we expect the CMO business to grow by about 7-8% compared to the previous year.
Okay. And this is excluding the contribution from the new herbicide plant, right?
No, this includes all our new contribution from new herbicide plant. All CMO, when you ask, all CMO will grow by about that level in this year. And that, of course, we expect the growth to accelerate in the coming years, which is why we've been saying that the portion of CMO to total sales will improve in the coming years. This year we see a moderate growth of about 7-8%, but then that product where we talked about the high inventory comes back into the system, and the demand for that comes, and some new projects come in, then the CMO business growth will be accelerated further.
Okay. And if you can comment in terms of the growth expectation in enterprise business?
Sorry, what's the question?
What kind of growth you're expecting in the enterprise business, at least on the volume terms?
Well, volume terms we're expecting, Arijit, what is the volume term increase that we're expecting this year?
Volume should grow anywhere between 20 to 24% for enterprise businesses. Year-on-year volumes. Okay. Yeah. Thank you. Thank you for
Thank you very much. The next question is from the line of Viraj from Securities Investment Management. Please go ahead.
Yeah, hi. Thanks for the opportunity. I just had a couple of questions. First is on the triazole, market which we cater to. If you look at the global size, it's around $3 billion, and our share is like less than 5%. So one of the key differentiations we always talk about is having a higher purity levels, which is offered by Astec and it's not matched by many players globally, which also drives a better position on the cost wise. So despite such a healthy, position, competitive position in the global space, we're still not able to make a sizable dent. So, any perspective you can share? Why is that?
Well, actually, when you look at the $3.3 billion market, it is distributed over a whole range of triazole fungicides, right? And we make about 6 or 7 of them. At the moment, our major revenues come from about 3 or 4 triazole fungicides. The whole point is that we are going to be introducing 3 major new triazole fungicides in the next few years. And those will obviously increase our market share, contribute very much to increasing our market share. The other thing is that China is also there. They take a significant part of the market. So it's a question of getting the market share from them, because in the generic space, you are getting market share due to a competitive position, and over time it will increase.
So the 3 molecules which we are looking to cater to, what kind of a addressable opportunity, market opportunity, those account for, when we say this $3 billion?
Of the triazole fungicide market, these three will account for about between them of the total triazole fungicide market, almost 45% of the total triazole fungicide market is these three products.
Okay. So these three products, do we still have any avenues to increase the share, or what kind of just to add to that, what kind of a demand supply trends we are seeing broadly? Are we seeing any major capacity expansions or any indication you can share?
Yeah, obviously the ship from China is one factor. There is a ship from the originator also. They reduce their own production because they want to bring in their new molecules into their plants, and they don't invest in new capital expenditure. So the only way to bring in a new molecule is to move an old product out and bring the new one in. So there is the opportunity. We are already seeing that the innovators are coming to us and saying, "We make this for us," and that's a significant uptick. There's a factor of the market share moving from China to India. So that is how the growth is happening with the existing molecules. And then obviously the growth in introducing new molecules is very obvious.
Okay. Just to add to this, for existing molecules...
Sorry to interrupt, Viraj, but may please request you to return to the queue for your follow-up questions as we have several participants in queue. Thank you. Ladies and gentlemen, in order to ensure that the management is able to address queries from all the participants, please restrict your questions to 2 per participant. Time permitting, you may return to the queue for your follow-up questions. The next question is from the line of Madhav Marda from Fidelity International. Please go ahead.
Yeah, hi, good afternoon. Thank you so much for your time. I just wanted to understand, in our total revenue, what would be the mix broadly between our enterprise sales and the CMO business?
Well, it is typically 80-20 at the moment. 20% is enterprise. Last year it was 17% was the CMO business, purely because of the overstocking of that one product which saw a little downturn. So let's say 20% of sales is CMO, 80% is enterprise. And our endeavor is to up the ratio of this 20% as much as possible in the coming years.
Okay. And how do the contracts vary between the enterprise and the CMO business especially in terms of the pricing and the volume sort of offtake agreement?
The CMO business is a cost-plus model. So the volumes are forecasted, say 3 years rolling, and that's how it works. When it comes to enterprise sales, it's based on registrations. You're the registered source. So therefore, there is a certain amount of stickiness in the business. Customers are obliged to buy from their registered sources. At the beginning of the year, we tend to agree on an indicative price, but in certain situations where the market is changing very frequently, we do it on a quarterly basis. But we usually have a fairly good idea about what the annual offtake of these people is.
Okay, good.
Mm-hmm.
And in our total revenue, what would be the share of the top, let's say, top 5 molecules contribution to the overall revenue for Astec currently?
I don't know that number. Arijit, do you know that number?
Well, we work it out. Don't have a ready number, so I can just share the details later.
Just be in touch with our people. We'll try and pull it out with you.
Sure. Yeah, and the last question from my side would be on our pipeline, the new product or the new molecule pipeline that we have. Could you help us with how many new launches are we expecting in the next couple of years, and are they all in the triazole side, or are we entering into any new chemistries as well? Thank you.
On CMO, we are putting in four new products this year. which are not triazole fungicides. They are non-triazole fungicides. Some are herbicides, some are herbicide intermediates. So they're in a very wide range of chemistries. The enterprise sales molecule that we're introducing this year is a triazole fungicide.
Got it. Okay. Thank you, sir.
Thank you. Next question is from the line of Alisha Mahavla from Envision Capital. Please go ahead.
Hi, sir. Good afternoon, and thank you for taking my question. So first, what is your current capacity utilization?
I see we have different lines of production. Therefore, to give you a capacity utilization as a broad-based thing is difficult to tell. Some lines of production are working at 90%. As I said, the one which is very short, the Chinese producers have gone out of production. That line is running at 90%. There are other lines where there is scope for upping the capacity utilization. They're the multi-purpose plants. So it varies across different lines of production.
Okay. And for the herbicide plant, while I understand that it has been delayed and you're currently doing trial production, so can we expect the commercial launch by Q3 or in H2 and for it to start contributing in H2? Or is that expected more towards the end of the year?
No, we will see in H2 the invoicing of the material. Trial production has started, so it will get converted into commercial production quite soon. And then the invoicing will start. So we certainly Q2 onwards we will be seeing some invoicing. Q3 will be more, and H2 will be the maximum.
Okay. Okay, fine. And any target utilization level for year one for H2?
Yeah, well, for the year we expect the utilization to be about 25 to 30% for the new herbicide plant. And so by year 3 we expect it to be fully utilized.
Got it. And so just if you can give the split between domestic and export revenue for the current quarter.
Current quarter was 78% domestic, 22% export.
Okay, thank you.
Thank you. Next question is from the line of Shravan Vora, an investor. Please go ahead.
Hi, good afternoon, sir. Thanks for the opportunity. So I just wanted to get a little bit of color from you on this China Plus One that you've been talking about, and a lot of competitors have also been talking about. Like, is there the inquiries have definitely gone up, but is there something where we've moved ahead than just the inquiries?
Sorry, repeat the question.
Yeah, I'm saying that you've been talking and other competitors have also been talking about the China Plus One, where a lot of supply chains would come to companies like us. But I just wanted to get some color if there's actually some materialized client that we are talking to, or have we moved ahead on this anyway?
Yeah. Of course. I mean, we're seeing it very much on the ground. Last few years, we're seeing a lot of inquiries. A lot of projects are at various stages of implementation. It's very much a phenomenon which is not a prospective phenomenon, but it's already on the ground.
Right.
And we expect it to increase with time.
Right.
I mean, and we're finding that Chinese costs are going up so significantly that we were very surprised recently when we heard a comparative Chinese cost of a corresponding molecule, which was so much higher than what we can sell it for. So it's really a trend which is already happening.
Right.
Mm-hmm.
And just on just one more question. So if you could just give me the breakup of the margins between our enterprise sales business and the CDMO business, and like going ahead as you want to increase our CDMO shares, so our blended margins, which was the earlier guidance was I think 20%, so that should also improve, say 50 basis points year on year, something like that.
Yeah. Now, we've always said that our CMO business margins are about 5% better than our enterprise sales margins. And on an EBITDA level, yes, last year we ended up with an EBITDA margin of about 22%. We are well on track of at least improving on that. Yes, as the proportion of CMO increases, it will keep increasing. That EBITDA margin will increase by half a percent and 1% with time.
Okay. Perfect. That's all from my side. Thank you.
Next question is from the line of Dikshit Mittal from LIC Mutual Fund. Please go ahead.
Yeah, sir. So my question is on this new herbicide plant. You mentioned you'll be utilizing 25-30% second half. So that means that plant alone can give 15-20 crore kind of incremental revenues on a conservative side. So, sir, why are you projecting only 7-8% growth in the CMO? Maybe the base will decline this year?
No. That is an incremental business. Arijit, how would that be if that is giving an incremental one? There's something else that may be a bit less.
That is the one molecule which the customer is having some stock. So that won't be there in this year. So it will take at least 2 years to start that production. So there will be a dip in the existing one, but it's covered up with the new CMO businesses. One particular molecule which we have mentioned earlier. So that is the dip which is happening this year.
Okay. But the similar molecule, like last year also, it was weak, relatively weak, right, as compared to...
That is the same molecule. That is the same molecule. We did some quantity last year, which was a pending quantity. From this year, that will be taking at least one year to have a re-registration and start the production.
Okay. And sir, on enterprise business, you are saying 20-25% growth. So that will be driven by new product introductions, or basically the existing products will only drive this volume growth?
That will be partly by existing molecules and the new molecule as well.
Okay. And sir, just a clarification, like these 3 new molecules that you will be introducing, that market size is more than $1 billion, right? Global market size.
Yeah.
Okay. Yeah, and sir, lastly, any other capex plans we have because apart from this herbicide plant and R&D center? So any further investment plans are we contemplating at this point in time?
Yeah, this year we have a total capital expenditure plan of 150 crores. In the next 3 years, we're trying to invest 300 to 350 crores. That includes the current investment where we will do some part of the new R&D center work will start. There will be the start of the work on the new Tarzol plant, fungicide plant for the new molecules we talked about. There will be other miscellaneous projects, so that will be about 150 crores this year. In the coming years, we have other projects in the pipeline.
Okay. And sir, on the CMO side, any investment plan apart from this herbicide plant?
Yeah, as and when the molecules come up, we will do it because we have spare capacity in the herbicide plant, which we will fill up first, and then we will undertake additional capex.
Okay. Thank you.
Thank you. Next question is from the line of Dhruvam from HDFC Fund. Please go ahead.
Yes, sir. Thank you. So on the enterprise, you mentioned that 20-25% volume growth. I was earlier of the view, or probably from your earlier interactions, I understand that the plant was largely fully utilized, at least going in 3Q and 4Q. So what drives this 20-25% volume growth then? Is it debottlenecking?
We've done some debottlenecking exercises. That gives us a fair amount of volume growth, plus whatever is coming out of the herbicide plant. And yeah, it's a combination of so many things.
Okay. So the herbicide plant will probably get, I thought, will be part of the CMO business, but that's not the case, it seems.
Oh yeah. So you're talking about enterprise sales growth?
Yeah.
Okay. Enterprise sales growth of 25% will come out of debottlenecking and basically debottlenecking.
Primarily. Oh, okay. Okay.
And
without any significant investment that would be required.
CapEx, yeah, not much CapEx, no.
Okay. And so, what is the kind of growth that we can further add to this capacities, say, after this 20-25%? What kind of debottlenecking further that can be done, or it's a gradual process? You can keep adding a lot of capacity over a period of time.
Yeah, it's a very dynamic process in a chemical plant. When you have multi-purpose plants, you can find ways and means of utilizing the idle capacities wherever they are. And of course, when the new plant comes, then there'll be that will not run at full capacity from day one. So that will there'll be a ramping up of those capacities. So, it's a cycle, your investment and the asset turnover ratio of 1.5, 1.6, 1.7. That is a continuous process in the chemical industry.
Got it. And so the second question was related to the three products that you mentioned in the triazole category. So is the capex for that already started, and how long will be the capex duration? I believe that these three products would be coming, if I'm not wrong, would be coming in the new plant that you mentioned. And any sense on the registrations? Have you already started with the registrations? Some further color on that, please.
Yeah. So we're going to start the construction. Design work is at an advanced stage. The construction work will start after the monsoons. So maybe we typically take about a year to do our complete project. In the meantime, the registration activities have started. Yes, we have submitted the data to our regulatory authorities, and the applications have been put into the various regulatory bodies. So by the time that we are in production, not only will the registrations have kind of started coming in, but various patent issues and all that also, wherever patents are involved, patent expiries will take place. So it's all being synchronized.
Okay. So one to one. So probably from FY24 onwards, FY24 early, or end of FY23, we should start seeing the benefits.
Correct.
And sir, when you say you have already started the registration activity, I mean, I just wanted to understand this better. The plant is yet not commissioned. So how do you get the registrations then? I mean, do you start supplying these molecules from your pilot? I'm not sure. How does that work then?
Yeah. It's based on pilot batches.
Oh.
So what you do is you get your 5 batch done from your pilot plant. And then when you're on commercial production, the regulatory authority will ask you for production data to make sure that your production is coming out consistent with what you've submitted from your pilot plant. So that's a process that takes a few years to regularize. But your initial registrations can be based on your pilot plant.
Okay. So the pilot to commercial registrations is a quick one.
But maybe please request to return to the queue.
Just one clarification. The pilot to commercial is 1 to 2 years phase.
What do you mean, in terms of regulatory, or are you talking about in terms of our
regulatory? Once you submit the commercial data.
You can be producing, but it's just that you have to submit the data as well while you're producing.
Oh, okay.
They don't stop you from producing.
Okay. Perfect.
Once you've got your registration, you can be in production.
Mm-hmm. Got it. And then supply once the approvals are done. Got it, sir. Thank you so much. Thanks.
Thank you. A reminder to the participants, please restrict your questions to 2 per participant. You may return to the queue for the follow-up questions. Our next question is from Dhaval Shah from Girik Capital. Please go ahead.
Hello. Yes, sir. So just want some clarification on this CSM and enterprise growth. So we roughly do 6-7% growth this year in CSM, and this next year once the herbicide plant is going live and the new molecule also starts contributing. So should we see roughly 100 crores getting added to the revenue in CSM?
That's what our guidance is, that you can, since we are going to do it, the utilization will ramp up over 3 years. You can assume about 70 to 80 crores of additional sales turnover coming out of that plant in year 2.
Okay. So the 4 molecules which you mentioned will be added in CMO. So those 4 molecules would be so the large part will be coming in FY22 in terms of the revenue. Am I right?
Yes. No. 4 new molecules. A certain portion will come in this year, and obviously it will be ramped up over the years. They're just introductions this year, right?
Okay. And all these 4, so 2 will be from the herbicide plant, and the rest 2 will be from the existing infrastructure. Is it correct?
No, actually we can make all of them from the herbicide plant, and some part of the existing plants will be used.
Okay, got it. And in the enterprise, we are the growth which you guided. Now, even that is coming. Nothing is coming from the new plant. Everything is so nothing is from the herbicide plant in the enterprise business, right?
Mm-hmm. Nothing is coming from the herbicide plant. Yeah, correct.
Nothing is coming.
There is one product which is coming out of the herbicide plant.
Yeah.
I don't know how much sales is that coming to?
That will come to around 30 to 35 for this year. There's one enterprise product which will come from herbicide.
Yeah.
Okay. 35 crore from the non-herbicide.
From the herbicide.
From the herbicide plant, which is non-CMO.
Non-CM. Okay, around 30 crore. Okay. And okay. So around so coming back to CSM, you said 80 crore FY22, and then similar revenue can get added in 23 also as the ramp up happens in year 3.
Yeah.
Okay. Got it, sir. Thank you.
Thank you. Next question is a follow-up from the line of Viraj from Securities Investment Management. Please go ahead.
Yeah, I was asking on the existing molecules in triazole. If you look at last 2-3 years, there was a phase where even propiconazole was also faced with severe inventory and overcapacity in the market, and even this year we have seen some other product facing overcapacity and pricing issues. So if you were to understand, for existing molecules, our cost position, how would have that changed, or how would have the yield changed for us? So any color you can give on that? And second question is on the R&D and the scope of space of new molecule launches. So is it right to think that once we commission the new R&D center, say by end of 23, it may take further another couple of years for us to capitalize and look at a much more wider scope and number of launches, new product launches?
Yeah. The first question was what was the first question?
So first question was on the existing triazole molecules which we're catering to. How would our
the competitive advantage. Yeah. So we find that our cost of production now is pretty much in certain products it's more than the Chinese, because we're more backwardly integrated than the Chinese. So that certainly, without naming the molecule, we are very much ahead of the Chinese with respect to one of the molecules. The other one where we are similar to the Chinese, but with their rising costs, I think now we are reaching a point where our cost of production will be a little lower than the Chinese. The new molecules that we're introducing, again, we are pretty confident that we are more backwardly integrated than the Chinese manufacturers are, and therefore we will be at a great advantage against the Chinese. The 3 ones that I talked about, which constitute a very large proportion of the global triazole market, we are absolutely backward integrated into those.
So once we kind of commercialize these, any aspiration in terms of target share which we will be looking to cater to, say, over next 3 years or 3 to 5 years?
I don't think we have an aspiration of market share, but I think we want to grow the business at a healthy pace. I think it's very difficult to tell because new opportunities keep coming up and we're forging new partnerships all the time, which give us ability to get more and more market share. One of them is to really collaborate with the innovator, and we're working on that. But in terms of a market share, Arijit, would you have a view on that?
It is difficult to say market share because the present trials which we are doing, our market share will be as low as 5 to be as high as 8%. So we are still in a single-digit market share, right? But more than the market share, I think it will be more in terms of which are the markets we are targeting. That will be more important than looking into the overall market share. Because the production varies, it is so diverse, and there is a cyclical nature of all of this product demand. It is very difficult to pinpoint and say whether the market size, what we capture or what we target at.
Okay,
but nevertheless, we know that there's a huge upside in terms of the ability to grow this business, to grow up, to grow the volumes.
Okay, and on the R&D, new R&D center?
No, the R&D front, yeah.
In terms of new launches?
See, even with the existing R&D infrastructure, we're kind of launching 3 to 4 new molecules every year. So when the new R&D setup comes in, that capacity will be increased multifold. So having said that, it's not only a question of how many molecules, but the complexity of the molecules, right? How many stages are involved, and so one molecule could be of 3 stages, but another one could be of 10 stages. So that's equivalent of 3 times the amount of work involved. So the new R&D department obviously R&D setup will improve the bandwidth, but I think that once it is commissioned, obviously it will take the lag between products coming out of that R&D facility will be about a year or 2 after it's set up.
Okay, fine. Thank you and good luck.
Thank you. Next question is from the line of Nikhil from Simple. Please go ahead.
Yeah, hi. Good afternoon. Thanks for the opportunity. I hope I'm audible. Yeah. So, just 2 questions, sir. One is on the new product launches. As you mentioned that we are looking at 4 new product launches in the CMO space. Just want to understand management's focus on what product selection criteria do we follow. You said that on complexity, on improving the complexity of production in terms of number of steps and all, but what are parameters you focus on? And even in triazole, as we see, like we've been there in the market for quite long, and when we say we are close to 5 to 8% market share, and initially in the call you said that the costs our pricing is much better now versus Chinese. Do you see that the market share acceleration in these molecules will happen, and probably in the newer molecules also the market acceleration would be much faster?
Yeah, we think so. We believe that will happen. We will see how it goes. That should be what should be going on. See, the thing is that in this business there are also, as I said, registration issues. There might be some Chinese producers who are already registered. Now, right now it is a China plus 1 policy. Now it could afterwards become an India plus 1 policy for the Chinese. So if a Chinese producer is registered and they're getting 75% of their production from an Indian producer, they might say to hedge our risk, we will buy 25% from a Chinese producer. So that will go on, So we would never expect to get the entire amount, but yes, it will be accelerated over time.
And on the product selection, what product do we look at in terms of the product basket, in terms of selection, what product we will launch? And there is also this enterprise product launch between enterprise and CMO. So I would believe that there would be two different lenses for enterprises and a CMO kind of a product. So how do we decide which should go in which basket and what products we want to launch? If you can just help me understand the thought process.
It's different when it comes to enterprise sales.
Sorry to interrupt, sir. Mr. Nikhil, maybe I request you to please mute your line because there's a disturbance from your connection.
Sure, I do.
Sorry, sir. Please continue.
Yeah, when it comes to enterprise sales, obviously the first thing we look at is to be in the triazole fungicide segment because that's where we have the specialization and the knowledge and the expertise. We look at obviously market size, what is the size of the market, our ability to crack the technology, market access, customers, market partnership. I mean, obviously everything has to start with somebody wanting your product. So we first talk to our customers and say, this is a product that you would like to work with us on. And when we've gathered enough interest in the molecule, and we find that the size of the market is interesting for us, then we work on it. So these molecules have fulfilled all these criteria. Our customers want us as a source. They're very large volume markets, diversified markets in South America. They're used in major crops and very critical for fungal control. So we look at all these dimensions, our ability to be competitive. Once we're convinced about all these things, then we start developing it. And in general, we found that it has worked for us. When it comes to CMO, then it's a matter of pitching ourselves. Like the customers know what kind of technologies we're capable of. They have a history with us in many cases. They know what we've been delivering in the past, what kind of things we practice. So based on their understanding of what we can, what our strengths are, they come to us with proposals on molecules that they'd like us to produce. And then we take it up from there and we develop it, and then the project goes to commercialization.
Okay, just one last thing. On the three triazole molecules, you said on the global level our market share is 5 to 8%. But for our customers, what would be our share? And generally, would there be 2 to 3 suppliers for each molecule for a innovator or for a branded player?
Yes, there will be 2 to 3. There will be 2 to 3. Historically, what happened is that these are molecules which were registered in the days before the China costs went up and when China was in a very dominant position, right? So they've already established a couple of sources in China. And then India came along as a powerhouse in agrochemicals. Of course, in one of the molecules, a couple of molecules we've gotten early on. But the view in those days was India would be the second source, right? Now that is changing to India being the first source and China being the second source in the new molecules. So yes, the answer to your question is there would typically be 2 to 3 suppliers for each of these guys. But based on your competitiveness and your kind of relationship, your delivery performance, your quality, that market share will change. So that's why more and more, because we are very good on delivery, performance, and quality, we are getting more and more market share.
Just one last thing.
Sorry to interrupt, Mr. Nikhil, but maybe please request you to...
Sure, I'll come back.
Thank you. Next question is from the line of Amar More from AlfAccurate. Please go ahead.
Hello. Am I audible to you, sir?
Yeah. Yes.
Sir, I have a question on, or rather a clarification on the new product pipeline. So you said that 4 new molecules, 2 in CMO and 2 in enterprise, that will be produced from the new herbicide plant, right?
No, I said 4 new CMO products, 1 enterprise sale product.
Okay, but
the enterprise sale product will be made in the other plants. And the 4 CMO products will be made in the herbicide plant.
So because last call, if I remember, sir, we had talked that 4 new molecules, 2 CMO and 2 enterprise products, which were likely to produce from the new herbicide plant. And now, followed by that, we are saying 3 new molecules in triazole fungicide, where the market size is around 1 billion plus, that we will be introducing with a new capex. And followed by that, again we are saying that 4 new molecules in the CMO, right? So basically 4 plus 3 plus 4.
No. See, we had those 2 which we had already got the commitments for. 2 more we got commitments for now in this quarter. So those we'll have to produce now. So that 2 goes to 4.
Okay.
Right. The 1 enterprise molecule, in any case, we have in the pipeline.
Okay.
The 3 molecules are going to come on stream the following year because it's going to take us a year to build the plant, right? We don't start the construction in Q2 of this year.
Correct.
So that's going to be in the next year.
So basically total 7 products. Is that my understanding correct? Total new 7 products. 4 already coming.
No, I'll just clarify. The molecule, which one of the enterprise sales molecules will be introducing this year, will also be part of the new plant because we'll be producing in our existing plant where the capacity will be relatively limited.
Okay.
When the new plant comes up, that molecule will be produced at a much larger scale. So that will be overlapping with interchangeable with that one.
Okay. And sir, this new triazole fungicide where the plant is going to come next year, and let's say, as you said, that $1 billion kind of opportunity, so around about 40% would be these 3 products. So addressable size would be something around 3,000 crores. So should we, what would be targeting? Like, we will be targeting, like, say, 10% market share in that. So in that context, the capex would be something around 150 to 170 crores, even for these 3 new molecules?
Yeah, it's greater than 100 crores.
Okay.
We are finalizing the exact project cost, but our initial estimate says it's more than 100 crores.
Okay. Thanks, sir. Thanks a lot. Thanks for the clarification.
Thank you. The next question is a follow-up from the line of Dhruvam from HDFC Fund. Please go ahead.
Yeah, sir. Sir, actually, again, some clarification. So, the CMO plant, the capex that we have done is about 100 to 110 crores, and the asset turn that we had earlier probably mentioned was about 1.8 to 2x. Now, this capex is split into 2, which is the CMO and the herbicide plant, and the herbicide plant probably goes in the enterprise business. So when you talk about the 20-25% growth in the enterprise business, that includes the herbicide portion of the CMO project, and the CMO part is the growth that you have guided is 6 to 7%. Is that broad context right?
Yeah.
Okay.
So when you say herbicide plant, it is a plant which can produce herbicide, therefore it can't produce fungicides. So in that plant, we can produce a CMO product or we can produce a non-CMO product. It should be compatible with herbicides.
Right. And so, is there a broader target? How much of this is of the CMO project? How much will be in the CMO category and how much will be in the enterprise category? Or you can shift it whenever you get a contract and it comes.
Yeah, we can shift it. Yeah, we can shift it. Yeah.
Perfect. This clarifies. Thank you so much.
Thank you very much. Ladies and gentlemen, that was our last question for today. I now hand the conference over to the management for closing comments. Over to you.
Thank you. I hope we have been able to answer all your questions. If you have any further questions or would like to know more about the company, we would be happy to be of assistance. Stay safe and stay healthy. Thank you once again for taking the time to join us on this call.
Thank you very much, sir. Ladies and gentlemen, on behalf of Axis Capital, that concludes today's conference. Thank you for joining us, and you may now disconnect your lines.